Welcome back, Alpha Hunters. Let's take a look around the market. Hopefully, you're having a wonderful Hump Day Wednesday. And we have a nice little gap down again today. If I was on the live stream at the end of the day yesterday, I would have said, be careful if we gap below yesterday's low. And we did exactly that. Definitely was watching that market sell down yesterday afternoon, continued to sell down. Basically, when I got off the mic, it kind of rolled down there for another 20 minutes. Kind of went sideways, a nice little pop there. But yeah, we definitely had a nice little gap. This is FOMC minutes, just got released. That's what this reaction is. So we'll probably dive into that here a little bit later. Don't worry about FOMC minutes because they usually don't drive the market too much. They did one time last year. That was back in I believe April. But we did have a little bit of a gap down, almost 0.5%. Yeah, nice little gap down there. Okay, so just kind of choppy on the open. Had a quick snap up there about 30 minutes after the open. Got right into the low kind of channel there yesterday afternoon, and then we just kind of dumped off there for about 40 minutes or so. About 40 minutes. Kind of been a choppy comeback throughout the day. About an hour and a half ago, nice little bullish run there. Past hour, not really doing a whole lot. We got FOMC minute reaction going on right now. Everybody kind of reacting to nothing. It's just people putting in orders that are timed to go in at this time period because it takes a little bit of time to go through the FOMC minutes to kind of figure some things out. So, all right. So that's the SPY down 0.5% currently. Qs down about 0.75%, 0.8% down right now. They did have a nice little gap down as well, down about 0.2%. Traded a little bit higher there in the first 30 minutes, and then you can definitely see how much more sideways they've been after that breakdown in the morning. They've definitely been more on the lower end channel kind of day. Definitely compared to the SPY. SPY's had a little bit more of the pop action, especially here over the past hour and a half. We were seeing some strength, in the other areas of the market besides big tech yesterday, and it seems to be like that's continuing today. IWM have a nice gap down here today. Currently down 1.8%. Okay. IWM RSP kind of held up pretty good. So did DIA. IWM gap down a little bit over 1% today. But look at that sideways action there. Intraday. Okay. All right. DIA. Same kind of deal. Gap down. Definitely nice trade lower there on the open. First hour and a half. Traded lower. And then it just kind of went on a nice little rally here. Nice little rally. And then the past 45 minutes or so, 30 minutes. Nice little rollover action here. RSP, pretty good here. They also had a nice little gap down about 0.5%, a little bit over 0.5% on the gap down there. Currently down 1%. Nice trade lower there in the first hour and a half, hour 15 minutes. And then they had a little bit of a pump. It looks a little bit more like the DIA rather than the IWM. Okay. The IWM and the Qs kind of look the same. As far as definitely just sideways chop down here at the lower ends of the day. The RSP DIA kind of look a little bit more similar. That has not happened much. Not happened much. I'm going to take a look at the hourly, kind of see what we look like here over the past a couple weeks here on the hourly. Okay. All right. Yeah, IWM looks a little bit worse. Wasn't too bad yesterday, but it's kind of the second half of the day yesterday. Got a lot more of that selling kind of coming in. You can definitely see how sideways we've been here for the past several hours. Kind of looks like it might get a little bearish here. We'll see what happens here over the next 25 minutes. Definitely come down from those highs. Nice kind of resistance area up here around 205 or so. That's what the line is there for, right? So it kind of came up, kissed into that area, has come back down here over the past couple trading days. Qs, all-time high area here, got up to, what was this high? Intraday high of 412.92 there on the Qs. Was at the morning of December 28th. So for the past couple days, you can definitely tell how much the Qs are really coming down. Now, I'll look at this on the daily, but this level right here, taking it at this level yesterday, I kind of wanted to bring it up, but I wanted to see where we close. I'm going to bring it up real quick. You can basically see I have my my horizontal cursor there. It's right at that close there. What day was that? On December 20th. And we closed below that level yesterday. So that's what I kind of wanted to bring up today is I want to see if we closed below that yesterday, and we did. And yeah, we definitely got below that level, closed below that level. Didn't close below this level that we had back on December 14th, but we got below it. We got below it barely. That was basically once we got below that little lower wick back on December 14th. That's when basically we bounced, right? We got a little bit of a bounce. And if I would have been on the mic yesterday, you know, in that late day rally, I would have said, watch out if we gap below yesterday, or yesterday's lowest price. So, yeah, that's a brutal one. Because big tech, I mean, we know that is the largest weighting. You gotta focus and look at some of the largest weightings in any stock market period. Like the stock market's not going to do much without the largest weightings, whether it's bearish or bullish. Largest weighting stocks are going to kind of support the market. SPY has not broken down those levels though. Back from December 15th, December 18th, or December 20th. So SPY hasn't broken those levels down, and I have to see if that happens this week. So, all right, let me run through these on the daily. So, kind of mentioned this yesterday. Gapping below that 10 EMA kind of makes a sense that we probably run to that 20 EMA here sometime soon. Didn't really know how the price action was going to set up, but we're going to kind of chop today and then maybe break down the second half of the week, maybe come down to the 20 EMA. But yeah, we got down to there today. There, the other scenarios, yeah, we came down to it today, or we would come down to it today, and then maybe we chop in between the 10 and 20 here for maybe a couple days, and then maybe we see a breakdown later on. I mean, it's gonna be interesting to see. Maybe we get a little bit of a bounce here as we go into the end of the week, early next week. Maybe try to make a run up to 475, and then maybe we roll down later on in January. All right, Qs. Yeah, Qs, the big one for the Qs, and this is why I wanted to wait to kind of talk about the Qs a little bit. We were just talking about like this very important price level here back on December 20th, this little lower wick back on December 14th. But really, the important level is, or the important thing I wanted to talk about here is if we got below and closed below this 20 EMA, that would be a pretty big one. I mean, I know it's moved rather quickly down below, broke, the 10 yesterday, 20 today, but now you have a much larger pocket here down to that 50. And let me turn on the long terms, the 100, 200 aren't a big deal right now, but you can see we have a pretty good pocket here, and if we just get below that 50, then we're gonna have a pretty good pocket back down to probably around that 380 level, 375. So that's not really a big importance right now, right? It's not important right now because we still got the 50 to kind of get through. I would imagine we're probably going to still see some bullishness, probably some bullish pops here on the relatively shorter term over the next couple of weeks, because we've had so much momentum here over the past 2 months. A lot of people, a lot of analysts were very bullish coming into the year, so we'll probably see some dip buyers. It's not going to go down in a straight line. I was really surprised it went up in a straight line over the past 2 months. And you could have probably said, hey, it's not going to go up in a straight line. And then it did. But, it eventually comes to an end. IWM, yeah, kissing off that 205 level. Have a pretty solid gap here. Makes sense the IWM at least would come back and fill this around 193 or so. We also have a pretty solid gap all the way back down here at this low around 170, 169. Other than that, it had some pretty good consolidation spots along the way. You can just see, like, the IWM just pops and then consolidates and then just pops and consolidates and then pops, consolidates and then pops and then reverses. So makes sense. It probably just rolls down for how much we've been bearish on the markets. Generality, I wouldn't look for that just to continue to happen. DIA's been the one that, man, it blew my mind. Blew my mind how well this thing was. This is all-time high territory. This blue line was the all-time high back from 21, 22 time frame. And the fact that it's, holding up basically the best out of any one of these market-based ETFs is kind of astonishing. But if you know how the DIA, the Dow Jones is weighted, healthcare did very well over the past 2 months. Also tech did. So those are the two major weightings on it. UNH is probably still doing pretty well. Let me just check that real quick. UNH, UNH popped pretty hard yesterday, so up even 0.5% more today. RSP though, doing a little rollover action, gapping below yesterday. Okay, maybe not totally gapping below it. Let's see. Yeah, not quite. Yesterday's open was not totally cleared, but got below it really pretty quick. RSP, this is where I'd rather be allocated. I'd rather be in the RSP IWM. I've mentioned that before. Definitely away from the Qs, SPY. And I would imagine the RSP IWM are probably going to see bearishness if we see the market really roll over, but they'll probably perform the best. All right, let's take a look at that VIX. How's the VIX responding today? Some pretty good bearishness out there. It's all right. It's all right. It's up. It's up a little bit. One thing that you're probably noticing here is we got a shoulder, neckline, head, neckline, shoulder. What are we trying to do here? Are we trying to continue, come make a breakout, retest this neckline, and then see some pattern of an inverse head and shoulder pattern here on the VIX, then maybe we go higher later on? Yeah. It's kind of hard to not see that, but it doesn't mean that we're breaking out. We might just be in a consolidation range. This is pretty low end here for the VIX, and it can definitely stay at these lower levels for a period of time. It doesn't come down to like a low and then just bounce. It can kind of sideways chop down here for a while. Typically when it does that, the market's kind of going bullish. So we might see that along with the market. If the market starts going bullish, we might see it just sideways chop down here. But if we get up over that 14 and a half area, 15, be curious to see what's going on with the market as well. And maybe we would be seeing an inverse head and shoulders there actually playing out there on the VIX. Dollar was up very strong yesterday when I was on the live stream. It looks like it dropped off pretty solid. Nice drop. Look at that huge upper wick. Wow. Let me check the intraday on that. So yesterday, dollar was up very strong. What? So this doesn't make sense. All right. So the daily, that daily candle doesn't make sense. So it doesn't seem like we came back down at all. It seems like we just ended at the high of the day. Came down a little bit. So, yeah, all right. So that makes... All right, so just imagine this upper wick is just a full body candle. So we have two full body candles in a day, in a row on the daily. Looking pretty strong there. Let me see where we at on this downtrend. Come on, grab it. Thank you. You could say maybe from that high matched in with those highs, we're probably getting into kind of like the upper ends of this downtrending channel here. So I'd probably be looking for at least a little bit of consolidation if you're trying to be bullish on the dollar. I would not want to be bullish right here. Or if you're trying to go bearish, you're probably starting to look for that kind of, you know, consolidation type setup to maybe roll over breakdown here coming up soon. Either way, you're probably just on pause right here at this point in time. You're going to want to see a consolidation set up sideways, and then you're going to want to, you know, probably just start to see what tops start to do here on the daily time frame. Yeah, that's about all I got there. I wouldn't want to be bullish or bearish right now. I think right now you're just in a pause spot, trying to wait and see. Probably going to look to track these low candle days and these upper candle days, and see if we get a pretty good like pennant pattern set up here. Kind of just a consolidation and tightness. Let me see. Kind of like this. You know, we were on a run and it started consolidating here. And then we got that breakdown below these candles, and then it just kind of dropped off there. So you're going to be looking for something like that. Something like this as well. All right, DXY. Gold. Gold did not hold up today. All right, so gold yesterday held up very well with the dollar being up as strong as it was yesterday. Gold did not drop off. Gold dropping off today. That's about it. I mean, I would still be looking to buy dips on GLD. Gold in general, just, I mean, a lot of it had to do with yesterday. I mean, yesterday, it's been strong. You know, it's been strong even when the dollars had strong days. 10-year yield, not continuing up as strong today as it was yesterday, but throwing some upper wicks up into the 20 EMA area, back-to-back days. So there's obviously, right, there's obviously a resistance like right here. You know, and it might just be the 20 EMA. But if you get over that, we're probably talking about a pretty good run. Yeah, I mean, we got some tops in around that area, nice bounce spots in that area. Resistance back there. So yeah, that's apparently a pretty good spot. I'll leave that horizontal line there for now, and we'll see what this kind of looks like going into the future. But yeah, if the yields, 10-year yield takes out those super wicks today and yesterday, that seems like that'll be pretty bullish for that 10-year yield. 10 and 2 inversion coming down through nice little upper wick yesterday. Did not hold over that little top that we had early December. Okay, might just still be consolidating. Maybe we push lower going forward. HYG pushing lower. That's so interesting. Wow. Bonds are down. Yields are down. All right, hold up. I gotta check some different yield time frames. 2-year yield is up. All right. 2-year yield's up. So maybe, let me check the long terms. 30-year is basically flat. So it's kind of like the 10-year. But yeah, that 2-year, let me see, the 5-year. 5-year, basically flat. 0.3? 0.3 year? Is there a 0.3 year? Yes, there is. And that's barely positive. So that's interesting. The short terms are strong today. The yields, short-term yields are strong today. HYG does trade more with the short-term yields, or inverse of the short-term yields. So that makes some sense. LQD, investment grade corporate bond ETF, they're also down. Maybe they track more of the short-term yields. Okay. Let me look real quick, since we just got FOMC minutes from our last meeting. We had some pretty good movement. I mean, you can definitely see we had some pretty good movement. What did the dollar do? Yeah, we had some pretty good movement. Definitely coming down right now. This is the market reacting. Kind of just choppy. Okay. Let me go back to the bonds. LQD, though, definitely had a nice little gap down. TLT, basically flat. And I think that kind of corresponds with what we saw from yields. Throwing a nice little upper wick. They've come down during the day. Basically flat now from yesterday, so that makes sense. They're basically flat. Bonds, ETFs are this TLT ETF is basically flat from yesterday. So that makes sense with the 10 longer term yields. All right, let's take a look at that sector rotation. And I'm going to then put an hourly time frame on this, and we'll go back and look over the past couple weeks or so. Energies are doing the best today. XLE, we'll take a look at that. Commodity based energy, the crude oil stuff was not doing well. Gasoline was not doing well. Heating oil was not doing well yesterday, but the stocks were doing very well. So be curious to see if that's the same thing kind of going on today. So XLE, best performer. Utilities, healthcare, communications also outperforming the stock market. XLP, staples in line with the market there. Financials just barely underperforming. Materials, tech, industrials, discretionaries, and real estate all underperforming there on the day. Okay. Intraday, let's take out the gap because we did have a pretty good gap today. So intraday energies are definitely seeing the intraday buying. Looks like they had a pretty good run there a couple hours ago. Utilities, communications, materials all outperforming. Financials in line with the market there. Healthcare, tech, industrials, staples, discretionaries, and real estate. Wrapping out the lower end laggers of the day. Okay, so I'm going to throw on an hourly time frame here. And let me go back to really the beginning of last week. Yeah. So since the beginning of last week, right after Christmas holiday, healthcare, utilities, staples, all outperforming the most. Right, the safe haven. And really, I'm gonna look at the past 2 days because it really looks like over the past 2 days, day and a half, it looks like those have really outperformed. Energies, financials also outperforming over the past week and a half. Real estate also doing pretty good. In line with the market there. XLC, communications. Materials, industrials underperforming, but discretionaries and tech underperforming quite a bit. Let me go to a 15-minute. I want to look at the past 2 days. There we go. There we go. So since the end of 2023, this is how the performance is matched up. As far as sectors performance, tech has been getting annihilated. We saw that yesterday. Tech has gotten annihilated. Discretionaries have also been hit pretty hard. Industrials were getting hit pretty good yesterday. They're underperforming so far in 2024. Materials kind of in line with the market. Real estate, communications, financials outperforming. The biggest outperformers so far this year: staples, utilities, healthcare, and energies. Energy is doing pretty well. Let's go back to an hourly. And since the beginning of December, beginning of December, we got real estate, healthcare, financials, industrials. Okay. Underperformers, those are all outperformers. Underperformers, communications, discretionary, utilities, materials, staples, energies, and tech. I mean, tech didn't perform the best in the second half of December.